My friends, I hope you are doing well. Today, I wanted to talk about options with AMC. So, I've made a video before about options where I talked about how the best way to help AMC when it comes to options is not buying crazy, YOLO weeklies or anything along those lines. It's going to be buying at the money, in the money, or slightly out of the money options. So, I'm not going to spend too much time today on the actual option chain itself. I kind of want to talk a little bit more. Probably the number one questions that I get asked pretty regularly and frequently is going to be about how I do like my covered calls or covered puts or anything along those lines. So I want to talk a little bit about my strategies for that. Especially when it comes to options, my friends. You guys know the deal. I'm not a financial advisor. Everything I'm doing is for entertainment purposes only. If it helps you out, please like and subscribe, help the channel grow. If it doesn't help you out, please don't waste any more of your time watching me. So, having said that, let's jump on into the video today. As always, follow me on Twitter, Colin_Gladman. That's the easiest way to keep up with everything that I'm thinking and what's going on, especially intraday pricing wise and movement, news, all that good stuff. That's the easiest way to stay up to date. So, looking at the option chain for AMC going into this upcoming week, ending on March 4th, not not too much really going on. We've obviously got a lot of open interest around that 20 strike. That's always going to be a key level, especially when it comes to retail. Retail always has a habit of picking the obvious numbers. I will do 20. I will do 40. I will do 100, stuff like that. So, or I will do 145. I'll just got what's the last one I can do? Boom, I'll do that one. Retail has a habit of doing that. It's pretty easy to see where retail goes on the option chain. So, having said that, not a ton of calls going on. Biggest open interest I see right now is going to be at that 20 level. If we come down here and we look at the puts, we've got the most open interest looks to be at that $16 level. So that's going to be kind of where it looks like we're headed. But once again, so in the money means obviously just that. You are doing options that are already in the money. So for instance, right now, AMC is at $17.66. So, if you're out there and you're buying calls anything below, like 7.15 or $17.50 or below, is buying in the money options. At the money options would be probably like that 17.50 or 18. You could consider that, since we're pretty much right in between. Slightly out of the money means like $1 up to $3 out of the money. So that is going to be what will really help provide gamma and upward movement for AMC. Now, once again, like I've always said, if you followed me on Twitter, if you've watched my video, you guys know that these are not the type of options that I do. I simply will just buy shares. There's a certain percentage of my portfolio that are going to be shares that I simply buy and hold and don't do anything with. There is going to be a certain percentage of my portfolio that I will sell covered calls against. And yes, selling covered calls against your shares is essentially putting a bearish sentiment on those shares, because obviously if it goes way above your strike price that you sell those covered calls at, you would be losing those shares. So there is definitely risk involved with that. So when it comes to selling the covered calls, which we're going to talk about here in just a second, you have to be comfortable, with the risk involved of, if it goes over this price, I am going to lose my shares. Now, I have been saying many times that the fact that I do covered calls on my shares, when we started hitting this drop, back here in November, I made a ton of money on my covered calls, so that way it allowed to buy me more shares. And when I was constantly I'm selling my covered calls pretty close to, especially when I was super bearish, pretty close to right at the money or even slightly in the money at the beginning of each week. I would make a ton of money, and that money would allow me to buy more shares. So I know some people are going to think, oh, this is not the way, and all that kind of stuff. And as far as I'm concerned, the way is whatever is best for you, not what anybody else thinks you should do with your portfolio. I've said time and time again that you need to make the best decisions for your family and your portfolio. I'm glad nobody ever tells me when I can buy or sell anything when it comes to my portfolio, so I'm not going to do the same to you. I will not ever shame you for doing what you need to do. And for me, my capital constantly working for me is what I need to do with my portfolio. So having said that, this is not a great week for me to really talk about it, because I'm telling you guys right now, I expect a volatile week with AMC with earnings, and so I won't be doing any cash covered puts or any cash covered calls this week, and that is only due to earnings. I will probably make a decision on what I want to do post earnings, depending on how the earnings call goes. So Monday and Tuesday of this week, I won't be doing any contracts or anything like that. So let me explain what I do. So I do what's called the wheel strategy. The wheel strategy is going to be where you start with cash covered puts. Okay. Now this is more capital intense than your standard just buying option. So when you buy an option contract, so the way that I do it is you have to have the cash for 100 shares of the security that you are looking to purchase. So like for instance, my cash covered puts, how that works. So I tweeted it out. Let me just go to it real quick. I'll pull up. So I did 37 contracts at $17.50. And that paid me a total of $2,500 this week in premium. Okay, so you can see right here, AMC, the expiration was February 25th, 1750. So essentially what I was agreeing to do was I was agreeing to buy 3,700 shares of AMC at a strike of $17.50 going into this week. And for that, I collected a premium of, I don't remember the exact number, but it was a little over $2,500. Okay, so I mean you can add this up right here. Feel free. So essentially, what I did going into this week, because honestly I was a little bit more bullish going into this week, so I pretty much did it right at the money this week, and what it allowed me to do was going, okay, I'm either going to buy 3,700 shares of AMC stock, or it's going to go above that $17.50. And my worst case scenario there is I'm going to stick $2,500 in my pocket. That $2,500 turns into another 145 shares of AMC. Now, obviously, the downside is let's say AMC, when it dropped to like the 1450 or so, well, obviously this contract was very red at that point in time. And so it, if you have a magic crystal ball and know exactly what to do, then yeah, it would be better if it's like, well, if you're going to buy 3,700 shares of AMC, you should have just bought them at $13.50. But obviously we didn't know that, a war was going to be here. And when it comes to that, guys, so the bears, they get fueled by uncertainty in the market. So when the market seems very uncertain and everybody's nervous and everything like that, that's where bears really come out and dump a bunch of fuel on the fire. And the reverse is true. Once there is a clear and certain path, then things turn more bullish at that point in time, because we go, okay, even though we don't like war, we know it's actually finally here, and that's why I think we saw a bullish turnaround. We're like, okay, well, we know the conflict with Russia and Ukraine has actually started. Markets were tanking leading up to the speculation of it starting, and then once it actually started, then that gave the market more of a clear path at that point in time. And so, like I said, that definitely tanked this contract for a while, but then once we started recovering throughout the week, then we got to see that obviously, once again, this contract wound up expiring worthless. So that $2,500 that I made essentially, just stuck it in my pocket. And when I say stuck it in my pocket, I mean it's just in my account. I'm going to buy shares with it. But that's how, if I would have been assigned, so let's back up just a little bit. If I would have been assigned, so if AMC closed below $17.50, I would have been assigned 3,700 shares of AMC at the strike price of $17.50. So regardless of what AMC's price was, anything below $17.50, I would have been assigned those shares. But no matter what, I got the premium. Okay. And so I use that premium once again to acquire shares that just simply sit there. Those are my buy and hold shares. Okay. And then, so let's talk hypothetically once again. If I would have been assigned these shares, then the following week, so this upcoming week, I would have sold covered calls against these shares. And then if those shares got called away, then I would use my capital to buy cash covered puts. And then you go to covered calls, then to covered puts, covered calls, covered puts. And that's the wheel strategy, okay? So I always like to target at least 1 to 2% of my overall capital when I'm teaching my son how to do this. That is, my approach is I always want to be making at least anywhere between 1 to 2 percent of my overall capital is always my goal when doing cash covered calls and covered puts. So if we're looking at that, let's go up here to some option chain calculators. So let me make sure. Yeah, here we go. So it's pretty easy. Just Google a covered call. It looks like Option Strat is the one that I'm using, and essentially what it's going to do is it's going to show you exactly what you can make when it comes to your covered calls or your covered puts. So once again, let's go back to hypothetically. Hypothetically, let's say I would have been assigned those 3,700 shares. Those 3,700 shares are not just my buy and hold shares. So I would be selling contracts against those $3,700 shares going into this week. Once again, assuming I'm not going to do anything with earnings because I think things could get pretty volatile, either up and down. We'll see the after hours spike. You guys know the deal. You know what it looks like when it comes to earnings time. So I won't make any decision on selling contracts, my covered calls or covered puts until after earnings, like I've already said. So, but let's say if I would have been assigned those 3,700 shares, then I come over here and I look at the cover call contract, okay? So right now I've got my strike, my expiration date set as March 4th, which would be the Friday. My strike is right here at the $20. And so I would basically make $55 a contract if I did the 20 strike. So on those 3,700 shares, so once again, I would be able to do 37 contracts. So times that by 55, that would pay me $2,035, okay? And it shows you right here your net credit, and the net credit is going to be the premium that you get. Your max loss would be if AMC goes to zero, okay? Your max profit is going to be your premium plus the money that you would make from where it's at, the $17.67, all the way up to the 20, okay? So once again, the biggest risk with covered calls is going to be the fact that if we have that week where we really rock it and take off, you're going to be pretty upset, just like I would be if your shares get called away, okay? So that's why I only do it with a very small percentage of my overall shares. So once again, I have my shares that I just buy and hold, and then I have what I call or excuse me, I have my shares that I just buy and hold, and that's my moon bag. So if AMC takes off, that's my moon bag. And then I always have my dry powder, which is going to be constantly making me money. So that way I can acquire more shares. And then my ultimate goal is to get to a point where my capital is enough where me just doing my covered calls and covered puts, not just with AMC, virtually with any stock that I want to do it. I do a lot with Tesla, things of that nature, that is going to be just, I live off the premiums of my contracts. That's my ultimate goal. So, and I'm working hard for it. Just like I hope you're working hard for your goals. So looking at the calculator, for me, I would be doing right around probably $20. Okay. When I factor in where do I want to be, it's that 1% to 2% that I need to make at a minimum, or higher is always great. So it's always going to be that 1% to 2% I need to make. It's going to be based off of my TA. What do I see going on the chart over here? And then also to just my gut feeling. Okay. I'm a big believer in my gut feeling. My gut feeling was $17.66 on Friday. That's why I tweeted it out. And that's why, and it hit $17.66. So now I'm not always going to be able to call it to the penny like that, but I do believe that you should believe very strongly in your gut as far as if it feels right, man, it feels right. And if you make a decision and you did it based on what you feel is correct and you did it based on what your gut was telling you to do, those are, even if you make a mistake, your shares get called away or anything like that, those are decisions that you can live with. If your account gets, if your account takes a massive hit and you went against your gut feeling just because you saw somebody online, whether it's me or anything like that, you saw somebody else doing crazy YOLOs or anything like that, and you're like, I don't think that's going to work, but man, that would be a lot of money. Let me go ahead and do it. I mean, you're going to hate yourself forever. So at the end of the day, don't do anything, whether it's anything I say, whether it's anything anybody else says, unless your gut is really like, this is the right thing to do. Okay. You can also look at the same for the cash secured puts. Okay. So once again, like I've got 15 pulled up right here. So you would need a minimum of $1,500 for 100 shares. That would pay you a credit of $31. And then, of course, once again, your max loss would be $14.69, which is your premium minus you would lose your $1,500 if AMC goes to zero. And then, of course, your max profit is going to be your premium because obviously if it keeps going, way above that price, then you're not going to get assigned. All you're going to collect is your premium. So I did not get assigned last week. So what I would be looking for is when I come to my TA, so I'm using the fib retracement right here. We've talked a lot about the support that has been from our buy button collapse. So when I look at where I would buy like the cash covered puts or anything along those lines, I would look at something, okay, we're right here, we're struggling at the 382. So, the 0.5 at 1675 is going to be our first level of support. But once again, this is my TA don't work, people right here. It's amazing how 618, our most common place for support, is going to meet my support line right here later on in the week on March the 3rd. So if I was doing, the cash covered puts, which once again, I'm not going to make any decision. I've said it a bunch of times, just trying to make sure everybody hears it. I'm not going to make any decisions on what I'm going to do until after earnings, but those $15.90 level is where I'm going to be looking for support, somewhere between $15.90 to $14.75. So if I come over here, so at $15.90 at 31. So once again, let's just say I did the same 37 contracts. So 37 contracts at 31, that would pay me $1,147 if I do the puts at the $15. If I go, let's just say, okay, let's do 16. All right. Then that 16, you can see it, maybe you can't see, but on screen, it bumps it up to $57. So 57 times 37. Right? Yeah, 57 times 37 is 2,109. So I will probably do Since I didn't get assigned anything last week, I will probably do something between that $15 to $16 range. I mean, if earnings were kind of still staying in the same ballpark. But like I said, not doing anything this week on earnings, but I highly recommend looking up the wheel strategy with your dry powder. You should do it. You should play it. In my opinion, that's what I do, but you guys know the deal. It's not financial advice. Please, as always, if you have questions, please don't hesitate to let me know, shoot me a DM, all that good stuff. But that's pretty much everything I wanted to talk about. If you do buy options, if you're going $40 or $50 or anything like that, I mean, that's 100% move from where we're at right now, my friends. So please go far out. Go to September. You can pull up, regular. Well, so right here, you can look at the strikes and you can see you can go as far out as September 16th, or then the next one is January 20th of the 23. So if you're looking far out, go to those right here. You can go to the Yahoo Finance, the option. You can go out here. You can go to January 20th. So calls right now, there's 21,000 calls at the 145 strike price for AMC. And for puts, there's 34,500 contracts at 50 cents. So you can see there's just this massive spreads going on, okay? So once again, if you're going to go far out of the money, 100% moves or anything along those lines, please, please, please go far out time-wise. The September, the Januaries, my personal opinion, that's where you need to be looking for those. If you want to play in the money, slightly out of the money, or at the money options, then you can go and look at the weeklies. But once again, you can get burned bad. We all know AMC has a habit of running up like Monday, Tuesday, and then dragging it down to max pain on Fridays. But last Friday is the first time we've beaten max pain in a long time. So that's just kind of another one of those things that's like, all right, it's a good sign that good things are to come for AMC. But anyway, that's kind of how I play my wheel strategy. So like I said, I'm looking for 1% to 2% return on my money on a minimum. Anything more than that's just a bonus. I am looking at using my TA to decide my strike prices. And then last and most importantly, man, trust your gut. Make decisions that feel good to you, because even if you're wrong, so long as you're making the decision that feels good to you, once again, you can live with it. So that's all I've got as far as options go. Once again, please feel free to ask as many questions as you like. I want to be as helpful as possible. And if I don't know, I'll say I don't know. All right. So other videos I want to get out, we'll talk about fundamentals and a little bit of conspiracy theory stuff when it comes to AMC. And then I'll probably do a video of kind of just the overall weekly outlook, earnings, and everything like that probably tomorrow. But you guys be safe, be kind, and I'll see you soon. All right. Be good.